the Namibian GDP growth slowed to 4% in 2012 from 4.8% in 2011 and a 6.6% in 2010. This emerged during today's budget speech for the year 2013. Joining us now on the line from Windhoek to discuss the economic challenges addressed in the budget is Leonard Kamwi. He's an independent economist. Mr. Kamwi, good afternoon. Thank you so much for your time. Analysts were warning that the big issue, of course, was going to be the extent to which the minister was going to be able to keep within budget, given the fact that there were such demands on the public purse, and of course the big infrastructure program that has simply not yielded the kind of jobs that it was initially meant to deliver. Take us through your initial impressions of what the finance minister had to say today.
Thanks very much. I think she's more optimistic, if I were to summarize her stance. She seems to be very positive about the economy, especially about its ability to generate more revenues, tax revenues for the government. So she tabled today a very expansionary budget, looking at expenditures increasing 19%, revenues adjusted upwards compared to initial projections. So she looks excited there. However, if one looks at it in terms of whether it's going more into public works and development projects, as she calls it, or it's more same recurrent work, it's more likely that it's same recurrent expenditures being proposed again, raising concern for sustainability, perhaps.
Now, if we look at the previous budgets, of course, the lion's share always go to health, to education, but is the money well spent, particularly if one looks at the fact that Namibia is already on its third national development plan, and the kind of jobs that was meant to be yielded off TPIG, which is the big infrastructure rollout plan, was simply not what it was supposed to do. Are you getting value for money in terms of what the government puts into, infrastructure, education and health?
That's a big question. On it looks as if we have the right sectors. For example, education is number one. Roughly a quarter of the budget goes into education. But what are the problems in education? My view, and perhaps the general public, we have seen these concerns being raised over the course of last week, is that, look, you have job leavers leaving school. They don't qualify to go to university. Maybe 1/3 of them may qualify. 2/3 of them doesn't qualify to go to university. Out of that 2/3, maybe 10% can go to vocational school. So a lot of them just stay home. The economy is growing, but it is not creating jobs. So what you hope to see is perhaps an increase in absorption capacity from tertiary institutions to absorb those kids so they don't end up on the street and just increasing the unemployment numbers. Is that what is happening? Unlikely not. The money is going into building hostels and perhaps while it's likely to improve maybe the performance of those that are in school, they are unlikely to be absorbed in tertiary institution because that capacity is not increased. So that's problem number one. Problem number two, if you look at, you mentioned TPAG. The TPAG is short-term jobs. So you get to employ somebody for 3 months, and within the same year, the same person again reports to you that they are now unemployed. So you haven't affected the unemployment rate. The other big problem in Namibia is that of housing. The lack of serviced land, people can build their houses on. We haven't seen the budget addressing this. In fact, there are some interesting numbers being thrown out. The minister, for some reason, mentioned that the National Housing Enterprise was able to build 900 houses.
Now, of course,
yes.
Of course, the issue of the growing debt is also concerning, particularly if one looks at the kind of forecast for GDP growth. Take us through Namibia's government's ability to, service its debt, particularly in a global, economy that is making it increasingly difficult and making borrowing very, very expensive.
Okay. The debt position is perhaps one of Namibia's biggest advantage or good positions at the moment, because we were coming, say, 3 years back, debt to GDP ratio less than 10%. At the moment, over the past 3 years, because of increased government spending, that was pushed to about 23%. The minister is now saying she'll push that to about 30%. Her threshold is 35%. So over the next 3 years, she seems to be within that band, although she's approaching the higher limit. The other interesting thing about Namibia's debt is that it's predominantly, at the present, if you look at the debt stock itself, over 90% of it is domestic. So very little exposure to exchange rate impact there. It's only up until the previous year that she began trying to finance part of this debt from external sources, issuing debt denominated in other currencies other than the Nam dollar.